Good morning, options players. It is a fine day here in Penang, Malaysia. Beautiful sunshine, 34 degrees Celsius, which is, darn close to 85 to 90, somewhere around that. Looking forward to the coming week here in the market in the U.S. because you guys have had a time change and we have not. That means that the market here opens up at 9:30 p.m. and closes at 3:30 a.m. So I still get to have my morning pee in the middle of the night to make my end-of-day plays, and I get to have actually a little extra sleep because I only get to trade from 9:30 until about 11 p.m. So I get to go to bed at 11 p.m. tonight. Anyway, wanted to get a video out on MoneyTree. It's going to be maybe a little bit of a shorter video than we normally have during our sessions since we were kind of off on our timing and without too many live people. So just real briefly, we do have a disclaimer we got to read that we're not investment advisory services, nor are we registered investment advisors, broker dealers, so on and so forth. It shouldn't be assumed that the methods, techniques, or indicators presented in these webinars were profitable or that they'll not result in losses. Past results are not indicative of future results. Examples presented are for educational purposes only. The setups are not solicitations of any order to buy or sell, and the authors, publisher, and all affiliates assume no responsibility for your trading results. There is a high degree of risk in trading. So I just wanted to go through a few things. In the past, in the MoneyTree, we have identified future opportunities, and I'm actually only going to focus on a couple of them in this particular video. The first thing I'm going to focus on, or one of them I'm going to focus on, is CMG, and then also Disney, and then we also identified another one last week on Verizon. So we'll kind of go through those trades here and take a look at what we did, where we're at with them, and see if they're still valid. So last week we did identify Disney as a potential trade. We were in a long-term descending trend line. We're starting to roll over and consolidate, and we also kind of had a situation where the macroeconomy is a little bit overbought. So we did show this chart, a longer-term chart, showing that we do have a descending trend line. And we're buttoned up right up against that. So now the question is do we have a trade? What do we want to do? And so we did identify the potential that we thought we might come down, but we may not come down. So we were looking at actually doing something unique, and that is a credit spread. So we wanted to see Disney go up again before we'd get in. And we wanted to see it actually go to the 111.80 range. And if it did do that, then potentially we would make an entry. So we put out a trade plan that we were actually going to do a bear call credit spread if the price moved up to the recent high. So what we're going to do is we're going to sell a Disney March 31st 112 call and buy a 114 call as protection. And we're only going to do that if the price of Disney was somewhere around $111.80 or $111.80. So put in a good till cancel order for an estimated of 74 cents a contract. So that would be a credit. So I indeed did do that. I put that order in and had that entry rationale, and being that we were approaching the descending trend line, and if we did get filled, we were going to have some stop losses based on some technicals as well as some profit targets and risk position size with 16 contracts at $2,016 of risk. Also looking at taking a stop of $400. You really didn't want to risk in a real term $400, which is roughly 50% of our profit potential. I like to see at least a 2-to-1 risk to reward, so that was really kind of set at that. With a profit target at $944, which represented 80% of our total credit. So if we ever reach that, we would buy back the credit spread and basically pocket the difference. Unfortunately, it didn't fill. It is what it is. Sometimes these things don't fill. It's okay. I didn't look at it actually until Saturday morning, my time, after market close. So what I did is I canceled it. I canceled that order, so it didn't fill. It's too bad. I still think it was a valid trade if it ever went up there, but it didn't fill. So that's the way it is. That's the way things go sometimes. We also identified an opportunity in Verizon. As you might remember, we noted that we had a longer-term descending and ascending trend lines, but we also had a mid-term descending trend line here, and we're butting up against that, and we had a shorter-term ascending trend line, and we were right here when we went through MoneyTree. So I let everyone know that just for shits and giggles, I was going to actually enter a straddle with an expectation of a measured move either to here or maybe somewhere up here. Really didn't know what was going to happen, and so I put in an order with a trade plan. The order I put in was to buy a Verizon April 7th $50 call, and also buy a Verizon April 7th $50 put. And that order was for $1.80. It was good till canceled. And so basically the reasoning being that the price of Verizon is at the apex of a longer term descending trend line and a shorter term ascending trend line. Technical stop loss, none. It's really based on time, and we're basically looking for a move by 30 days to expiry, which is only a couple of days. We wanted a very fast move to see if it would happen and see what we might be able to take as far as profit. So we're going to take what we could get at 30 days to expiry, just a couple of days. Total position size is $900 with 5 contracts with a stop loss of 10%. I didn't want to take any more than 10% on this, so I didn't want to lose more than 90 bucks. And again, profit target as much as possible, and we're going to get out at 30 days till expiry unless we see something dramatically different. So the order was filled. It was filled on Monday, the 6th, for $1.80. So it was good news. And well, sure enough, it did make its move. So it was filled on this day, right here, for $1.80, and boom, we moved down. We did move down, and right here as we got 30 days till expiry, so it's time to go. I got up about an hour before the market closed, about 4 o'clock in the morning. I saw it move down. I took a look at the mid price. I put in an order. So I closed that straddle for $207, which is a 15% ROI. It's not a huge amount of profit, but well, you know, like I said, it was more for shits and giggles for you guys to take a look at how I evaluate and how I might actually do a trade plan and how I might actually follow that trade plan. So that's a success. 15% ROI is pretty good. The other opportunity we've identified in the past was Chipotle Mexican Grill. You've seen this kind of funky chart that I put on as some really interesting patterns for me. So essentially what happened is I did put an order on when we got up to that line there. I put an order on to buy a 430 put and sell a 425 put. March 31st expiry, so quite a few days, and the price of that spread was $2. And I had a lot of different reasons for doing that based on the chart, and you saw that a little bit. And the whole thing I wanted to do here is I wanted to double my fill. So I was filled on 221 at $2 a contract, and with a goal of doubling, or doing something at a double. So what I wanted to do is I wanted to actually sell 60% of my contracts, which are 10 contracts, at $4, which is a double, and then see what we might be able to do with the remaining contracts. Play with the house money. So it was filled, and eventually on the 7th, the order to sell 6 of those was indeed filled for $4. So we're sitting at a double. Really good news. I mean, we basically locked in a whole bunch of profit. We're playing with house money at this point, and then we started going back up a little bit. Okay, but what I did on this part is on this day here, I did convert. Okay, I converted the put debit spread into a put butterfly, very wide put butterfly. And I sold a 405 and bought 400 strike price puts to as a credit, and the credit was $2. And essentially what I did at that point is I had locked in $1,150, and gave myself a max profit potential of $3,150. And that $3,150 credit is going to be if the by the 31st, which is right around here, if on the 31st Chipotle Mexican Grill, if it kind of goes up into right in here, and we eventually expire right in there, I get to keep the credit that I got on the 4 contracts, the 4 put credit spreads, and then I get to sell the put debit spread for the max profit, which is $5. So I have a total max profit of $3,150, but right now I am absolutely playing with house money. I have $1,150 in profit locked in. That can't go away. No one can take it away from me, no matter what happens. Now, if I do see CMG actually kind of come down and start coming through that line, I probably will close the put debit spread. It may or may not be at a loss. It may be break even, but I don't want to deprive myself of additional profits. So, and by the same token, if I see it come up, I probably will close the debit spread at a profit as soon as I can. So just that's my plan is, but I really do expect CMG to kind of stay right in that range there. So far that's a pretty successful trade. So now the question is Disney still an opportunity? And we can, there's a lot of debate there, whether it still is an opportunity or not. My feeling is it is an opportunity. So what I've done is I've just basically moved forward my order. You guys can do this or not. I mean, these are educational. Just track it and see what actually happens. But I still would expect it to retrace back up, and if it happens to come back up here, I do want to be in a trade. I do want to be in a credit spread because I do expect it to stay below that descending trend line. And right here is when actually the April 7th option is going to expire. So it would still be below that trend line. But I want to get a good amount of money for it, so I'm going to wait until it comes back up. I'm going to be patient here. So I've adjusted my trade plan. My plan is to again sell a credit spread. I'm planning on selling a Disney April 7th 112 call and buying a Disney April 7th 114 call. I'm expecting to get 72 cents a contract. So that's what I'm looking for. I've just estimated it. Again, if it fills, it fills. If it doesn't, it doesn't. Who knows? But that it's worth it to me if it does get to that price. And again, the entry rationale is a price of Disney approaching the long-term descending trend line with a technical stop loss of 2 closes above that line, or actually above the break-even of 112.52, or 1 close above the descending trend line. I don't think it's going to do that, but if it does, I'm going to get out. I'm going to get out at a loss, and I'll take that loss every day. It's all about risk to reward for me. Again, the profit target is to stay below the 112. We've got a position size of 16 contracts with 2,048 risk. We've got a stop loss of 400, which is actually what happened if Disney happened to get up to right around the 112.75, with a profit target of 81% of the total credit, $928. And again, you see the difference between what the stop is and the profit. You really got about just under a 2.5 to 1 risk. And of course, we're going to evaluate this 7 days to expiry as well to make sure things are going right. And if we're way in the profit zone, maybe we'll let it go. If we're close, or up to still have the risk of going up again at that point, when maybe we'll just close it out and take what profit we get. So hopefully this fills. Again, maybe it will, maybe it won't. We'll see. So that is MoneyTree for today. Again, we do this on Sunday evenings, 8:30 p.m. to 9:30 p.m. Wall Street time. You guys just change your time, so there's exactly 12 hours difference between where you're at and where I'm at. And we do the group coaching, the systems review, which we didn't do on this video, but it's more looking at the post-mortem analysis when we do these videos. And we always look to do definitely look to review the trades that you've made, take a look at your trade journals, and do some prognosis for the future. Should be an interesting week this coming week, so I'm looking forward to it, and look forward to putting out maybe a couple more videos over the next couple of days. Cheers. Bye-bye.